Founder of Hawkeye Traders, Nigel Hawks began trading in 1986. His only tools, graph, paper, pencil, and a calculator. Nigel is now president of one of the most powerful volume trading softwares available today, Hawkeye Traders. Nigel went on a decades-long journey of research, education, and ups and downs of trading, which eventually gave him experience to be successful. Today, Nigel enjoys helping others flourish in their trading endeavors, and just as he has been mentored, he now offers one-on-one personal training to those aiming to fast-track their trading skills. Not only a successful inventor and entrepreneur, Nigel Hawks is a pioneer who took the simplistic and popular methodology of volume and expanded it into a suite of proprietary tools and indicators that are used daily by many hundreds of traders throughout the world. We are pleased that Nigel could take the time to join us today.
Thank you very much indeed, and good afternoon, good morning, wherever you may be. I'm sitting on a little island off the south coast of England, and it's coming up to 6 o'clock in the evening here. Now, I know there's only about 40 minutes for me, and I don't want to bore you all with a PowerPoint, but I'm going to rattle through it pretty quickly and then show you live charts, etc., etc. But first of all, may I just start by saying one of the main questions I get from everybody, and I just want to hit it right out of the park straight away. If I'm showing you is so good, what the hell am I doing sitting here at 6 o'clock on Saturday evening talking to you? Well, first of all, I never expected my Hawkeye suite of indicators to be out there with the general public. I developed them as my own trading program, but then a friend of mine who was a broker many years ago saw it, wanted me to show it to his customers. They asked how they could get hold of it, and Omega charts, if you remember that, which was the forerunner to TradeStation, had just started. I said, well, they can buy them. And off it went, and after being around for 14 years with these indicators, we have many, many hundreds, in fact nearly 3,000 customers worldwide who use Hawkeye volume to predict the market. So I hope that's answered that question. So let me continue. There's the normal disclaimer, blah, 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 you know, not licensed to give trading advice, etc., etc. If you're not happy, please leave. And I'll just take you through. I'm going to give you a very quick introduction to volume, the application of volume, and some closing thoughts. I've cut this right down as tight as I can because I really want to show you that if you understand volume, you're going to be the aha moment in your trading. And of course, I'm not sure whether we can do question and answers at the end of this, but we'll see how we do it. So, traditional trading, 70 to 80% of traders are failing. Think of it, that's a huge statistic, and yet people come and stay time and time again. A broker friend of mine in California last year, I said, how many times do people top up their accounts? And he said, well, it's 2.5 times on an ordinary average 10,000 account, and then they disappear. That's a huge amount. If they'd started out with 25,000 straight away, they might have traded a little bit better than being in the fear bracket all the time. But they're using traditional strategies, MACD, stochastic, Bollinger Bands, Elliott waves, moving averages, etc. And they don't work, those strategies. I've tried them all. They just don't work. And that's why volume is so important. Volume is the only leading indicator out there. All the others are just lagged. Signal price movements before it happens. I'm going to show you chart after chart in a few moments and just show you how volume is the real key. And you know, if you go back to the ticker tape boys, how many of you have read Reminiscences of a Stock Trader? You know, the boys in the ticker tapes, they just used to go and read price and volume. That's all they did. That's all we should do. Just look at price and volume. Don't overlay burden on yourself with the haze or the forest and the trees, and you can't see with clarity your charts. It signals the market intent. It shows you what's going to happen. And I'm going to give you examples of that shortly. And all other indicators are lagging. Think about it. All other indicators are lagging. How much time have you spent playing with your inputs on your moving averages, slow K on your stochastics, your MACDs, you know, 20, what is it, 26, 12, 9 or something? I don't know. They're all lagged. Volume on triple time frames is the real key. When you combine, and I know the last speaker was intraday, hundreds of our traders do intraday time frame, but I try to get them on triple time. When you see volume on triple time, it really is a wow factor. So how did I become a trader? I had a solid publishing business. I sold it. I invested 6 figures with the stockbroker. He lost it all. And then I started to trade. And I was horrible. I was terrible at trading the markets. In fact, I even reached the stage that if I thought I was going to be a plus on the trade was going to go long, I'd go short because I was wrong 80% of the time. But of course, that screws your brain up. You can't carry on with that. So I stopped doing that. And I understood that you've got to be a loser first. It's part of your entrance into being a trader. But the problem with that is it just engenders fear into your mind. And that is why most traders can't hold a trend run. They come out far too early. I mean, I see hundreds and hundreds of traders worldwide. I'm just coming over to the States next week to work with a serious hedge fund down in Florida who uses my volume. And it was very interesting speaking to the principal. He was telling me that when he first started, it was such a mountain for him to climb to get over the losing stage of being a private trader before he really moved on to be this successful hedge fund trader. So what did I do? I thought I'd better go to where the professionals are. So I traveled to the London Stock Exchange, and in those days it was before Bin Laden, so you could just wander in and lean over the balcony and watch the traders in the pits. And also in those days they used to stop for lunch, so I used to go out to lunch with them. I used to go out in the evening with them drinking, and I tried to find what they had that I didn't have. And I've got to tell you, I found the missing link. And the pit trader advantage is this: they've got accountability. They actually work for somebody. They've got to produce something. Most of us have turned the spare bedroom into a trading room, and most of us only have a partner, and we are responsible to the family or the partner. And I bet all of you have told a white lie somewhere along the way to your partner. How's your day been, darling? Wonderful. And you've had a crap day. But when you're working, they've got accountability. The boss sees everything. They've got free money, which we can't replicate, which is the bid and the offer. But here it is. They could feel the market. They could feel the buying orders coming in, the selling orders going out, and that is volume. And that is when I knew volume is the key, and I started my journey on volume. Richard Wyckoff is acknowledged to be the first guy really to come up with volume spread analysis. He was around in the 1930s. Amazingly, W.D. Gann and Elliott were his contemporaries. Same time, these great traders came out of the 1930s. And he studied volume and price. So what did I do? I jumped on a plane. I went over to Phoenix. I found the Wyckoff family. They were in a small little printing store in a small little shopping mall in Phoenix. I managed to get photocopies of all the original course notes, put them in a useful trailer, and got them back to England. And whilst I was studying them, and I went through these course notes with a fine tooth comb. I mean, I had a publishing business. I had 300 odd people working for me, and I really thought trading is going to be fantastic because I'd sold my business and I never wanted to have that amount of people working with me again. I discovered that there was something missing, and he took no account of the open. And I thought, no, that's wrong. That's why looking at volume, for me, up to now, hasn't really worked, because I'm just looking at the high, low, and close. And standard volume spread analysis doesn't consider the open. Hawkeye considers this as paramount. And it's very similar to an auction. And I'll tell you why. You know, in an auction, it sets the bias for the session. If the auctioneer starts something at $100 and he goes 100, 90, 80, 60, 70, down to 20, and nobody's put their hand up, and then somebody puts their hand up with a bid at 20, it'll probably run up to maybe 40, 45, 50 before it closes out. If he starts at 100 and it goes down to 80 and a bid comes in, it'll probably run up to 130, 140. It sets the bias for the session. And the reason that I believe, and I can't speak to Wyckoff, obviously, that he didn't consider it, was that in his day and age, time was not fundamental to the open. Why? Because New York would open, then Chicago would open later, then say Kansas City, San Francisco, Los Angeles, then across to Tokyo, then across to Sydney, Singapore, back to London, etc. The open wasn't timed. It was within a 24-hour period, whereas everybody now sees everything instantaneously. So that is why educators are teaching you to buy pullbacks today, because every MACD, every moving average that's broken, and everybody tells you on stocks, look at a 50, a 200 moving average, whatever. Everybody around the world sees when they're broken at the same time and jumps on them. Price moves too fast without attendant volume, then it pulls back until volume catches up and price moves on. So what I want to do is now show you some real live examples. But first of all, I just wanted to show you gold, because gold is very interesting at the moment, and I've just written a newsletter. If you go to my website, hawkeyetraders.com, sign up for the free weekly newsletter, you'll get me talking each week to you about volume and different charts. So let's just look at here. Everybody has been talking recently in the press about gold being so oversold and that it's going to be accumulated and prices are moving up. If you look at the gold price here, you can see that this is the Hawkeye algorithm on volume, and this algorithm does over 300 calculations per bar, and that is saying right now that it's still selling volume. Now this is the Hawkeye trend, and it obviously red is selling, and then it goes white showing you congestion, and then red for selling, and these little dots are yellow pivots, Hawkeye supports and resistance, and these are our stop areas here where the crosses and the liners. So you can see right down here it's still selling. Over here on the weekly chart it's selling, but we're in congestion, and here on the monthly you can see that they're selling on the algorithm, but it's flattening out. Now if we go over to GD, stocks ETF, you can look at this. This is a huge amount of accumulation volume that's been coming in the last 7 days. Now remember, markets have to go through phases, and I know that the majority of you are option and stock traders. I know there's some future traders, and I'll show you that future charts shortly. But markets have to go through phases, and commodities and stocks are identical. Markets go through accumulation, which means buying volume comes in when price is perceived at fair value. And then when that stock gets sucked up, i.e. the float is taken, it'll move up until it becomes unfair price. So the price becomes overbought, and then distribution takes place, and then you will see it trend back down again until fair value is reached, which is normally at a higher fair value than the original fair value, and accumulation will take place again. And that's why markets zigzag up and down, etc. Now let me show you some major stocks here. Here's Apple. Now we've just had a major up move on Apple. Look at the Hawkeye volume. It told you 1, 2, 3, 4, 5, 6, 7, 8 days before the trend goes that this stock was being accumulated. And if you look over, and this is what I was saying with the triple time frame, if you look over here, you'll see it had declining volume, 2 weeks of accumulation volume, and on your monthly, if I pull that up, you can see that you've had 1, 2, 3, 4, 5 months of accumulation volume telling you don't take the shorts, only look at the longs. And that is the huge benefit of understanding volume and taking that in. Let me just show you Amazon. I'm personally not a stock trader. I do mainly commodities, and I do Forex, and I trade the S&P very aggressively intraday. So here, for example, we've just had a move up on the daily on Amazon. Look, 1, 2, the whites are neutral, which just means that the market doesn't know, but I consider them to be the preceding color. So 1, 2, 3, 4, 5, 6, 7, 8. 8 days of volume came in before this market started to move up as this was being accumulated down here. The market goes, and here's the test. And you'll see this time and time again now because everybody's being taught to buy the pullback. A pullback comes in, it's tested on volume, it's a volume test, green comes in here, and then you get that wonderful move from 310 to 329.67 that comes in. It was all signaled there on the daily. Would you have taken it? Well, look over here. You've got declining volume here. Markets don't go down on declining volume. And then you've got some green volume that came in. And again, on the monthly, you've got some selling volume here, but it's declining volume, telling you that the bias is to the long side. See, the Hawkeye trend is going up. There's some declining volume telling us that there's some congestion area here, but it's declining. Green here, green here. I won't bore you and tell you what that is. That's just another Hawkeye indicator giving you the overall trend bias. And it's just telling you which way to go. And I don't know, eBay, for there's eBay going right against the market direction. But look, you've got here 1, 2, 3, 4, 5 weeks before the downtrend that came in on the weekly. You got weekly selling going in, which confirmed up with the daily selling over here. There's the daily selling, and you've got that 1, 2, 3, 4, 5 days before it broke down. There was selling volume right in at this top here. And if you look over here, the monthly is still long. But you know there's red volume in there, and that's increasing red volume that came in back in June, and that's telling you, and even over here you've got red volume and you've got the markets going down. Looking at monthly is a little bit too slow. I'd love to be able to have a 2-week chart up there. So I look at the actual price movement to the heights of the volume, and that gives me the heads up. Google, there we go, look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, 2 trading weeks. It was being accumulated before price move, and up it goes. And that happens time and time and time again. Netflix, a very popular, particularly for intraday trading. And you can see 1, 2, 3 weeks of accumulation before that price move up there. Green volume came in. But look here, 1, 2, 3, 4, 5, 6, 7 days of accumulation volume came in before this price move. Now, I know that a lot of you in the room are option specialists and option traders. I put my hands up straight away and say, I don't trade options only because I frankly don't understand how to do them. But there is a division of Hawkeye called HawkeyeOptions.com, where I have a very, very proficient option trader who uses the methodology that I have taught him on volume. And he joined us in October of last year, and we started 2 portfolios, one called the Jaws Strategy and Barracuda, and we're up 235% since October on our $10,000 account on that. And if you want to go and look at that, maybe you'd be able to type that into the room, please. HawkeyeTraders.com is the link, and you'll see how he ties in volume into trading, and we put out real live signals in the portfolio every day or whenever they become triggered. So here, for example, could I ask if you could type in also some stocks that you'd like me to look at, so that you know that I just haven't set these up so that they all look great for you. If you type in some stocks, I don't mind what they are, and they can be penny stocks as well. I'll put them in. This volume algorithm is available in TradeStation, Ninja, and MT4, and within the next couple of weeks it will be available in eSignal and multi-charts, and hopefully within the next couple of months we'll have it in Thinkorswim as well. So that's the algorithm here and the platforms that it's available in. And also, if you come to our website on a Wednesday, we demonstrate this live for you, and then once you have become a Hawkeye member, you've bought a Hawkeye indicator, you can come to our free trading room on Thursday, where I trade live in front of you from 8 a.m. Eastern on the Forex, and then my partner in Hawkeye, who's an extremely competent trader, Randy Lindsay, trades the S&P stocks and also crude oil through to about 11 or 12 in the morning every Thursday, and there's no charge for either of those runs. Are there any that have been sent in of people who'd like me to look at specific stocks, please? Whoever is handling this, or have they left me alone? Okay, they left me alone. So, you know, these are the stocks that I asked. Now let's go intraday, and I just want to show you something that we have developed, which is the world first for intraday trading. There's Apple on a 15, 30, and 60 minute. I can make that any time that you so like, but let's just leave it at 15, and you can see that the volume comes in here, and it shows you that the bias is to the downside. Distribution is taking place there, but it's against your 30-minute and your 60-minute, so you'd be unlikely to take that. But what we have developed is something which I call the gearbox and gear changer. It just seems ludicrous to me that people would trade intraday the same time frame, day in, day out. Why trade a 1-minute chart? I mean, it's nonsensical to me. Why trade a 5-minute chart? It's nonsensical. Each day, the market has its own profile. It has its own profile of time and momentum, and exactly why, or like a cyclist hits a hill, you change gears. You have to change gears continually during the day. So let me just show you Apple. What I have developed here, and it took me 5 years and 3 programmers, is the gearbox and gear changer. There are these two indicators on the left here. So this tells me every day what speed to trade the market. So it's telling me my slow speed would be 1776 ticks. That's my slow speed on Apple for Friday. My middle speed would be 888, and my fast speed would be 444, and it changes from stock to stock. And here you can see this goes yellow, blue. Let me just expand it out for you. It goes yellow, blue, etc., and red, and that corresponds to the color of these charts. That's red, this is yellow, this is blue. So it's telling me, as I progress during the day, what speed to trade. So you can see here is the beginning of the day, and it's blue. It's telling me to take that short there. And then as it moves on, it goes yellow. It says, okay, you're still short. Throw away this chart, and now we can only trade the yellow in harmony with the red. And now you can see the buying volume coming in, and we can use tick volume. It works quite fine. And then it comes in, and we've got the yellow, and that pushes it right up to there. And then we've got a short that comes in, and it takes us down to there. And we're still in the yellow time frame. This is if you want to trade it all day. It takes you up to there. And then at the end of the day, it's going yellow still takes us down to there, and then right at the end of the market you can see it takes you over to blue here, and there it gives you that little squirt down there. So for you option guys and just listening to the presenter prior to me, that will give you the real heads up in writing that option strategy. And I've got to tell you, I think it is far, far superior than time charts. And I've been doing this 28 years. I've been trading, and I've still survived, you know. And it really does give you the edge to be able to do that. Let's go and have a look at some other ones here. I don't know which other ones. Let's look at Netflix. It seems to be pretty cool. You can see totally different tick speeds. It's telling me Netflix is 384 by slow speed. It's telling me 192. And as I say, nobody else has got this in the world. This is exclusively to Hawkeye. So let's just go and have a look at what this has done. So you can see this is the line showing me the start of the day's session. So we started off on blue, and you always have to wait, in my opinion, for the first 15 minutes of the market to go through. There's the first 15 minutes. It's giving you a little short down there. I'm going to show you where to take profits in a minute, because I believe that what we educate you is that most people lose because they don't take their profits correctly. And then we are trading our yellow time frame now, and you can see that it's just neutral up here. It's just neutral, so there's no trading. And then we're still yellow, and we come to here, this down move that came in. Now, if we took that down move, we're trading it against our slower time frame, which means that we're not expecting such a trend run. And then we get another entry that comes in here, but it's in the lunchtime area where we don't trade, and then the afternoon session comes in, gives us that little short down there, etc. Now, the point I was trying to make to you was that most people take their profits far too late, in my opinion. And what we have done here is just take pure, straight, average, true range. And remember, that's what the turtles were working on, if any of you have read the famous book about Richard Dennis's experiences in trying to train people to trade. And most people are too greedy. I try and get all our students to before they can move on in trading, to have 14 consecutive winning trades. I call them plus trades. I never like to have winning and losing trades, because if you have a losing trade, guess what you are? And trading is a mental game. You have to secure yourself mentally as much as possible. And if you don't, you beat yourself up. And we're always after 280 hours down on these type of days, which are congested days. And you take them, as soon as it's come to 1, you take half your position off. A close above 0, you're out. And that is how it works all the way through. And I don't know if I can show it over here. I've got something else on. You can see that it does it here as well. You get down to 3, doesn't matter. You come off at 2. You go up. There's your 2 again. You come down. There's your 2 again. And there you go up. It goes to 1, half off, close under 0, off. Obviously, I'm rushing through this because I've got literally 40 minutes to show you. But that's how that works. And I just wanted to show you something else before I really move on to show you the ES and some Forex intraday, and then my time will be up, I'm sure. But let me just go and show you something like here. Once I come to a trend like this, let me just show you. One of the major, you got to remember that trends only occur about 30% of the time. 70% of the time the markets are in congestion. And therefore you have to hit markets pretty hard. When I was first starting to trade, I thought I'd better learn how to gamble. So I went to a card counting school in Vegas and went through that, and then I was let loose in the MGM Grand in Las Vegas. This is hundreds of years ago. And I met this guy from Dallas. It was archetypical Texan, big hat, gold Rolex, you know, sapphires, gold leaf everywhere. And after a few moments, you know, 20 minutes, he said, boy, he said, you're good at this. He said, but you can't bet for shit. He said, I'm going to show you how to bet. He became my best new friend. And for any of you from Dallas, his name was Caruth Bird, and I'm sure you've driven down Bird Highway, and his granddaddy's ranch was downtown Dallas. And I took what he taught me into trading. If you look here, there's a little yellow 1, then there's a 3, and then there's a 2. So, and there's a 1 somewhere else in this trend. There's the 1 there. And what this has done is just, let me just do this so that you can see it. Let me just do this. Let me see this quite clearly. And what it has done, it has taken, there you go, 1, 3, 2, 1. And I know that's a simple algorithm, but it took hundreds of hours, and we used to leave the computers on for like overnights, for weeks, to come up with the best algorithm. But let's say you do 10 contracts or 100 shares, you do 300 shares, an extra 200 shares, an extra 100 shares, and you exit them all at the same time. That takes you into serious money and serious leverage, and that's why I have guys, hedge funds customers both over in Switzerland and in America, who use my algorithms and use the adding facilities, etc., because it really shows you when to start hitting a run. And these are all generated through the volume algorithm, and there is, when I finish this in a few moments, a special for you today if you so wish it. And that really moved on substantially my trading. Let me just conclude, because I know that I've only got about another 6 minutes. Let me just show you the E-mini. Again, we come up with the E-mini every day, and this tells us what's tick speeds to trade. So it told me on Friday, this was my tick speed, 736, 2368, and 1184. And then I look, and this is my gear changer, tells me all during the day which chart to trade. I mean, it's so simple when you think of it. I'm surprised that nobody else has come up with the same concept. And this will just tell me from the start of the day, it's telling me go to the blue. Well, you'd expect it to be busy. And then it's telling me the rest of the day, this is a solid trend day. There's the yellow, just trade this yellow chart. There's the volumes coming in, and then it goes red. Forget that one, just trade this one in isolation. It's a slow market. Then it comes into yellow slightly faster, closes you out for your profit up here on your yellow. And if you were so hungry that you still wanted to trade right at the end of the session on Friday, it went blue, and it gave you a little long right on close up into the close of the day. And this indicator here is a very interesting one. I call it the Hawkeye kiss. Look at the profile here. And basically the green line and the red line are inverse of each other, and it shows you the advanced decline issues on the major 3 markets in America: New York Stock Exchange, the Russell, and the NASDAQ. So I've combined all 3 advanced declines, and it's showing me the sentiment of what the market is doing. So here, the market is declining, the green line's coming down. So, you know, if you're going long, you're not expecting it to go far, so you'd probably just look at a 1 ATR if you were trading it. You're not expecting the market to go far because it's against what's happening with the issues all being sold, etc., etc. So that's what I look at there. And then if I come across to my Forex is what I trade the most, but it's I swing traded. I trade 480 minutes with a daily, hold stuff for 5, 6, 8 days, etc. normally. This indicator here, I don't want to it looks like spaghetti, but each color is a different currency. And what I have done here, I've taken all the currency pairs, divided them into each other, and weighted them, and they show me what's happening. So here is the US dollar. It's telling me that the US dollar is going weak, and it's telling me that the Japanese is going strong, which is the magenta here. So let me just go and have a look at the US Japanese, and let's just see what is, there it is starting to sell off here as we come to this point here, as it's coming from an oversold position. So I just use that, and that filters it through, and this here shows me how long has everything's been in a trend, etc. So that's what we do, and that is building up the volume profiles. Look here, you know, there is red volume coming in. Now some of you say there's no volume on Forex, and you're absolutely right. There isn't any volume on Forex, but I can take tick volume. So I run tick volume into time charts or tick volume into tick charts. And there is the distribution coming on in the top of that up move. So when you come onto here, I keep banging on to all Hawkeye customers, students, that all I'm interested in is the risk of the trade. What is the risk that I'm taking on this trade? Well, I've got selling volume coming in here. I've got selling volume on my, on my 30-minute. Can you see I've got my selling volume there? Just bring that down. I've got selling volume in there, and I've got neutral volume here on my 60-minute. That is not a high risk. It's seriously not a high risk. And if I go and put on my 80 hours on that, where am I going? Well, I've already taken off one position just to cover myself. Now I'm looking to take off another position at 2, and then we have a methodology that will step down, etc. You've got to, and I call this the fat man. And when you're intraday trading, you've got to be a fat man. How does a fat man get fat and a thin man stay thin? A thin man eats a little rarely. A fat man eats a little often. And when you're intraday trading, you've got to nibble. You just got to take it. When you're swing trading and day trading, then you can go for the long trend runs. But if you're intraday trading, you've just got to nibble at the markets, build it up, like the previous guy was saying. You know, you can do 8% per day for the trading year. You'll be one of the world's top traders. You've got to keep nibbling. You've just got to start taking money off the table. Now, I've got a couple of things that I'd be grateful if I could show. And that is this. Excuse me, not the most competent person in all of these. So, my final thoughts are, this is over 20 years of research. That volume indicator alone took me many thousands of hours of work and programming. It's sophisticated, it's elegant. It shows you how to see the trades clearly. And, you know, you'll really know where to perceive your charts, how to place your trades, the profits you make, and how to protect your positions. Because let's say you're swing trading and you're long and you see red volume coming in, you want to tighten up your stops. And in the Hawkeye program, that does that automatically for you. So you'll see it. So here's the web special. I hate doing a sales pitch, but I want you to really learn this and come in and join Hawkeye. And I've done it as best as I can today for you. So the volume indicator, which, as I said, is available right now in TradeStation, Ninja, and MetaTrader. If you want to reserve your copy for eSignal or Thinkorswim or Multicharts, we will have eSignal or Multicharts within the next, certainly, let's say by the end of this month, and hopefully Thinkorswim by the end of August. We sell the Hawkeye volume indicator for $360. We include the private group mentoring. If you buy any Hawkeye indicator once a month, we have a 2-hour group mentoring between myself and Randy and all the Hawkeye users. We get together. You also have access to the Wednesday room where you can see Hawkeye in action. And that has a value of $1,000. I charge $500 an hour. We do 2 hours for that. I'm doing it for only $97, which is probably a couple of steaks and a bottle of Merlot at a Longhorn Steakhouse now in the States. And if you click that link, you will get through to it. But I will also, if I may, post that link to you. And the other one I'd be grateful for, if you would be kind enough to send, is we've done a very interesting article on the Forex, on win-loss ratios, particularly including the volume. So if I could just post that to you, I know that your membership would really enjoy that article, and it also, particularly for options, they'll be able to bring that in. So that's that. I've done the sales spiel, which I hate, and as I said, that's my time up, but I really do encourage you to come and understand volume. Once you can understand volume, you can really understand trading, and it is the aha moment. Just before I go, has anybody messaged in any stocks that they'd like me to look at briefly? Do you know?
WPRT was one.
WPRT.
Correct.
Okay, let me just do that one straight away.
We got about 5 minutes, so if there's a couple
Okay.
that you can fit in, we could do that.
Okay, that's great. So this is very interesting. Obviously, there was some big news out here. That wide bar is colored magenta. There's twice average true range over 20 bars, and it's green volume, but it's not in harmony with the weekly or the monthly. And sure enough, as soon as it went up, the professionals came in, started to sell. Look at the red selling volume coming through there, and there's the price move going down. So the amateurs would have been suckered into this, and they would have done whatever, the call options or whatever on that, but the professionals immediately sold into it, and there is the selling volume, a great example. One more, please.
Next, Walmart, I believe their ticker symbol is WMT.
WMT.
I got that right, yep.
Well, we can see here, let's go to the long term. Long term, the monthly is in buy mode, and that has been in buy mode since July of 11 rather, from the November of 11. It's been in buy mode on Hawkeye, and on the weekly you can see that it's in congestion. The Hawkeye trend dots here on the price are all white, and you've got red, white volume. White volume came through end of the week. Here you've got a down move which you could have taken, and again, had we gone and put on our ATRs, again you're going against the trend, but here you go right down to the 5 level, and we would be discussing that. I don't have time to tell you exactly how to use these ATRs, and now you've got a little long going back into the monthly, and that's the analysis on that. But it's far too early to buy this, but you can see 1, 2, 3, 4, 5, 6 days of accumulation volume have gone in on that to the upside. Can you give me one more? A couple more?
Yes, we have Green Mountain Coffee Roasters, which is GMCR.
GMCR, Green Mountain Coffee Roasters. Okay. Oh, that's a good one. Look at that. There was the accumulation volume coming in at the bottom of that downtrend. You had a downtrend there against the weekly and against the monthly. Boom, in it came. And unlike the other one that came in where it gapped up and selling, it gapped up, there was continual accumulation going on. Then there was a volume test here. The red selling here came in, but of course the price didn't come back down through. So there were no avid sellers on that. That was just pure profit taking, and bang, in it came, and you had twice average true range on Friday, a banger. Another one?
We'll do one more here. Let's see. Someone give me one stock in here. Go ahead, type it in right now, and I'll wait on you. I got GTI.
I quite like a penny stock because the volumes were pretty good on penny stocks, but here you go. Nothing's happening here. It's just in pure congestion volume, just going sideways, but a little bit of buying has just come in on Thursday and Friday. You've got declining volume on the weekly, and you've got buying volume on the monthly with a pause, neutral volume last month. So expect that one to pop out to the upside, okay? But it's going to struggle to get through, let me just tell you, it'll struggle to get through 1186. That is the area that you really got to be careful of, which will be up at these highs here for it to get any sort of momentum. Thank you all very much, and I'm off to the pub now. Thanks all very much.
Bye now.
Thanks for the invitation. Thank you.